Hi guys, I'm going to try to be lazy and try to do a couple of little things that people have asked for, all in one video really, and a couple of questions that people have asked, but wanted obviously a detailed video further explaining what it is, because obviously sometimes it's a little bit hard to put it over text message or email. Um, so we'll start off with the loss. So obviously, I'm uploading one now. Was the one that I was going to upload last night, but I didn't get around to it. Woke up this morning, did a couple of things. Woke up quite late as well, so it's just really come down to time. Um, the video you'll see that I think it was about here was where that video was at. It was really just all about managing your losses and not to be scared of losses. And just know how to manage your risk and how to manage your capital and don't get too greedy and just lock in them issues. Right. So price come down and started to rally. It hit triple bottom. And I saw the momentum, the sellers sort of running out. I didn't like this as a first sign. Obviously, I would have normally got, like you'd think naturally, take your money out. Then go maybe in with a buy or just wait to see where it goes. Well, a lot of the time in markets, you can see this happen. You can see this happen, and then what'll happen is it will sort of consolidate, and then it'll just have a massive, massive drop off. Because what it's doing right now is it's waiting for the momentum to build behind it. You could also say, obviously, that there is a ascending triangle pattern formation that appeared. You could very much say that, as you can see there. However, like I say, when you make a strategy, you need to stick to it. The moment that you start taking this into account and saying, like, it should make you aware of what could happen, but it should not ultimately change your decision of what trade you're in. I always believe that you should thoroughly, thoroughly stick to your strategy. Otherwise, if you don't, you may as well just not have one. Um, and if your strategy is pattern trading, that would have been a perfect entry. But this is just sort of how I trade. I don't trade off that. I use RSIs and so forth, to sort of see how we go. But anyway, this box that I drew here was the exact amount of loss that I come into play with on open market Sunday last night. Obviously, I was a little bit bummed out when that trade come against me. It come up and it come against me, and then I got the closure out on here, which is why the big red arrows coming in. You can see that that's where I closed my position because it closed above, and I would normally wait to see the consolidation, but due to these other little variables, I decided no, this is the right time. Now this is my confirmation. That's all I needed to see to get out of the trade and reverse it. So then I instantly got into a buy, and the reason that I say it does not matter about your losses, not to be scared of them, is because soon as I did that buy, this market rewarded me with nearly, if you went to go again, nearly 3 times the amount that I lost on that previous trade. Okay, so what I did do though, as soon as I opened this trade up, I took 2 positions out, quite small positions. I took one position right here, and I waited for it, and it come up to about here, and then it come back down. I was waiting to see the retest of this further down line, which it looks like we might be getting here before getting another one in. And then I got a second retest as soon as I started seeing this candle push up a little bit higher, and it come to about here. The engulfed both of them two, and I just sort of got a buy in, and it went all the way up. Now, when I got to the top of it, I took both positions. I used both positions to hedge basically my bet that I had previously. So I took the take profit on them, knowing now that this could either rocket back up, but every time you see a spike like this, normally you get the sell off because people are just trying to jump on that bandwagon and make their money real quick. So as soon as it come out, I took that profit, not because it was greed, not because I was trying to money chase after my loss, but what I was doing is actually locking in my rewards and my loss for the last trade, so it didn't actually make any difference to me, and that's what I was doing. As soon as I come up, now I'm in a safe bet, and due to these massive buy-ups, I was a bit concerned about where this market might be pushing. Obviously, right now it doesn't look that large, but as soon as you drop it down, you start to see all these come in because the play of that trade is so big that it was ridiculous. As soon as it come up, I just sort of took my profits. Then what happened is I just sort of waited for this retest. I've now got a current rebuy purchase on here. Okay, so this buy purchase could go against me. It could go in my favor. You don't know. We just got to play it out. But my buy purchase is here. Still my stop loss down here. But as you can see, it hasn't completely shot straight through. So we don't know how this is going to go. But normally you would see that come down and then this one push back through if the sell-offs were really that harsh. But they're not. It seems to have bounced off the last highest high and it sort of bounced straight up. Right now we've got a bit of confusion going on within the market. This could still well go against me. It could well go up. Like I say, I'm expecting it to now go up because it's very rare that I get 2 losses in a row. But it's never to say that it can't happen. But that's basically just this trade, and just to say, don't get scared about your losses. Losses come and then just around the corner, great things await. So don't get too stressed about them. Another thing that I was going to touch up on. What was the other thing I was going to touch up on? I've drawn a blank here. 2 seconds. I would cut this out, but I'm lazy. Oh, that was it. Top-down analysis. Okay, so say we go over to a main currency pair here. We have the top-down analysis. Say you go in. So this is what top-down analysis is. You'll go to the month. Okay. Now you're not interested in all these previous. You can take them if you really want. But what we want to do when you go into the month is you want to go from your right to left. Okay. So let's just, for starters, let's clear this off. There we go. So we have one jump here, another jump here. We've got a bit of a jump there. Let's draw it anyway. Okay, let's just draw it anyway. Okay, so these are really. Let's put these all the way up. Let's put them in blue as well so we can see them. Okay, so this is top-down analysis. So what we are doing currently is we are highlighting on the monthly chart. We are highlighting the key areas to where prices bounced before. Why do we choose a monthly chart? The reason we choose a monthly chart is because then you're not getting all the little movements involved, all of these little ones. You're actually getting the perfect bounces. So at the moment, this is currently what we have. So then what we do is we drop down from the month to the weekly time frame. And the reason we jump into the weekly is, as you can see, some of these don't stand as they should. This one has, you got consolidation, a bit of a bounce, you got a bounce, 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 and another bounce. You got this big sell-off, but as you can see, you might want to just draw that down a little bit. So now we've got the 2 bounces here. This one might want to just come up. It's quite a margin compared to the last, but where that price sort of wants to push back up. We can also look left to right. Sort of see where we're at. So I'm happy with that. Like I said, I'm just going to do a quick rundown, but you can see all these touches here and the previous touch there. So what we do now is we go from the weekly into the daily. Now, if you start seeing already, you can see that price comes in and it bounces and it bounces and it bounces and it just moves around this point. Okay, so we got a bit of a field. So then what we could also do then is lift this up slightly. And remember, these are always zones. Okay, so these are always zones. So now what we have got is your daily range. What you could then do on your daily range is then highlight any other key areas which you feel that price is bouncing at. That way you've got a bit of a further down and a bit of more of an insight into where you're at. And then when you drop down into the daily, so what you are looking for is for these touches. So this price could bounce back up, but due to the nature of where it's at, you could say, oh, it's going to bounce off of here, it's going to bounce off there. Due to the nature of where this trade is at, we could potentially see this trade come down to the lower ends. Okay, so, and when it does come down to those lower ends, it should. It's not to say that it will, but it might come back up, retest, and it might take a couple of days or a week or two to get there. But when you finally come down to this point, what we'll be doing then is say like we highlight quickly, just we go for, I don't know what to go for. Let's go for this one just because it's right there. Okay, hopefully the hourly will let me go back that far. It can be a bit finicky sometimes. Let's have a look. Yeah. So as you see on the hourly, right, you would have seen price come down. We know this is key point, and we're waiting for it to touch. It's price coming down, touch. So you could have got your buy-in here. Now, what else, how I like to trade, do you also see as soon as you see this touch? It's gone oversold. Okay. So what you could do, just to make sure that this doesn't cut through, and you got a late entry, is use this previous line, like I've always mentioned, of price, the previous point before it went oversold, and then line that up. So obviously we have it's coming in roughly around here. And as you can see, this price is actually holding very nicely across these lines. That arrow is getting a bit annoying now. You see, that's nice square. It's holding pretty nicely against it. We got a couple of bounces, so we know this is a nice key factor. So what you could have done is waited until we saw where this trade actually got executed at. So we could have waited and waited and waited. And when you saw that buy purchase come in, you could have got your entry in here with your stop loss down here. Okay, so this is a bit of a gap, but you are nearly 100% certain then that this market's going to move in your direction. See, and what's happened is it comes up, comes up, comes up, and it sort of fizzles out, but you haven't got to worry about that just yet. It's not what you got to worry about, because obviously we're playing it off the top beam and the lower beam. What we're worried about is it coming down. So what we saw again is price again came down, and it touched, and it went oversold. So another area we can see is this key area here, and the key area there lines up with here. So what then instantly you can do is you have your first entry of your buy-in here. That's needs to be brighter, right there. And then you can get, as soon as that breaks again, a second buy entry here. And then as you look, we instantly, then this one has 0 drawdown. That one does have drawdown. It happens. And that market has continued and continued to push up. So what you could do then is you could have capitalized on this and taken the run back down, using trends, using really anything you like. You could still manage that way to push back forwards. To sort of trade it up and trade it back down. But if you're a swing trader and you're not worried about all these little movements, you want to capture the big movements, you could then wait. And as you saw, your price come all the way back up to the top. Now, as soon as we get this bounce and this other bounce, you can see this market is heavily, heavily overbought. So you'd be expecting this to come down, but that doesn't always be the case. So we've got a massive bounce along that line and comes back up. So then what you actually see is like you say, it's come back up to that line. And we've got the price that's sort of consolidating around it. So what we are again waiting for is a break, as I've said previously, of this price. The reason that we've gone for that break in this price is because it's the last overbought, and I'm now looking for here, which lines up for this point here. So what we were doing is we were waiting to see a break of that to say that the continuation or another one to go overbought, then might push it back up, and then that'll be our entry. And we're holding, and we're holding, and we're holding, and that never comes back up. You could then get re-entries on all of these little bounces if you really wanted to, if you want to play that aggressive. And then we did get a buy, a oversold margin. We did get that overbought even. I keep on saying oversold. I don't know why. And then you could sort of view it and say, okay, so which way is this going? Okay, so what you could then do, and this is like I say, I don't trade major currency pairs because you get a lot of this that happens, a lot of consolidation that happens, and I'm not a massive fan of it because that's where market manipulation comes in to get the liquidity to then push that market up higher and make their funds. So personally, how I would have played this out is put my support straight underneath this barrier line here. So you see it's multiply touched and it's just underneath. This is a bit volatile. At first, this is where it's come out and it's sort of finding its ground. This is a lot more stable. So I would have pushed it to around here. The moment that it breaks that, I would have gone in for the entry. Like I say, soon as I go oversold, I always look for the last known support, which is here. Now, the difference from here to here is not that large, so I would have just pushed it anyway and just seemed to wait for where it goes. And it would have come down, touched. I would have been a little bit nervous until then. Obviously, we got the continuation back up. And then again, like I say, if you were to then take this overbought, go back down to the last support, which is here, it would have never touched. And you can literally trace it the whole way. You've got it again. I don't go for these. You can see multiple little jumps. You would have been okay with them if you were to drop it down. Even if you left it where you were, you would have been fine. I don't like going for them. For me, there are a lot of false signals. I would have seen this one, which would have been my favorite, and I would have just dropped it down to the last known support, or even placed it here because that's quite solid. I would have cut it through the middle and gone through here, and we can see that price continued. And then we got our touch. So the touch, then you could have said, "Oh no, I'm going to wait," or you could have taken half your position as a whole, because obviously this is quite a large order. You can almost guarantee, like I say, that when you get these large orders, the price is going to start falling against you. Massively overbought. So I'll take most of my positions there. Would I take a sell? Potentially, it really don't. I don't know when it comes into these because the odds in that coming down and pushing back up after such a big buy purchase, with so many people jumping on the arse end of the sell, I'm not too sure. I'd probably be waiting to see sort of how this market plays out. And when I sort of see it jumping down, I probably would have just missed this trade out and gone to another currency pair because my stop loss, my entry would be down here, and my stop loss would be up there. That's colossal. I would never want to play that game. But as you can see, price just sort of continues and continues. There's a lot of consolidation when it comes to major currency pairs down to where we are now. I'm not a massive key lover of major currency pairs, but this is why I don't trade it. But this is basically top-down analysis. There's a couple of other ways to do top-down analysis. I mean, I've seen people do it like this. So they basically get your horizontal line, they zoom in, and what they do on the zoom in is they sort of just go for the tops. So they go, they want to get the average of the month. So they go from here, 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 and here. And then what they do is they'd find again a very smaller um, line within these, and then place that one there, one there, one there. The reason why they do this is they're trying to look for the average. They're trying to look for where the averages are. So when they go into the week, I hate that color. What a terrible color to choose. Let's go red. Okay, so and the reason they do this is to take averages. So when they move this down, you can also see that a bounce happened right here. So as soon as they move this down a little bit and they find where their key area is and they keep that where that one is because they're happy with it, they can almost say now that this one is pointless. It's tapped once or twice, but inevitably it's gone up where it's gone. So they could then delete that one. They could then move back up to this higher end. They can see these bounces. Actually, just for example, leave it back in there. So you see these bounces, and you can also see a couple of bounces around this area. Like I say, they're not lines, they're zones. If you were to draw a box around these by a couple of pips, you'll see exactly what I'm on about. Now, when you drop down to the daily, you can see that we have got one entry drop down, but it never enters in, and a couple and a couple. This is how a lot of people like to do their top-down analysis. I'm not a massive fan. Like I say, I'm more of a fan of this style. I'm a massive swing trader. I prefer swing trading. That's just sort of how I stand when it comes down through it. Um, Ignore this. This was trades that I'd taken through since last year, 2 years ago. Like I say, I've only had one loss in a while, which is why I was sort of expecting to have this loss. And if you were to trail that back up, this would have been my unfortunate loss that I have encountered. Like I say, you can't win them all. You can't win them all. It's very small compared to the win that we had. This is why I like to draw these out lines because it likes to keep me in sort of the loop of where we're at. As you can see, there's a massive overstretch market here, so there's a lot of buyer sellers. If it stands in the positive, we can probably see a little bit of a movement up until we fall it back out. I hope that's gone over a lot of things. If you are on the mentorship program and you are asking, obviously you want a bit more, I can send you one personally. A little bit longer, so people because obviously you'll want to sit through this. I mean, this video is already 17 minutes long, but then if I was sending you just whatever it is that you're asking, maybe I missed it in this topic, I can then properly focus on that, and I can send you it personally. Because obviously, no matter if it took me 20 minutes then to do that video, exactly then. You're going to watch the whole video. You want everything out of this video. A lot of these people are just going to skim this video and look for just what they're after. So that's sort of all we're set at today. I just thought I'd give you an insight. I'm currently into a buy purchase with my stop loss down here. We'll see where it goes. Hopefully, it doesn't go against me again because it's very rare. Like I say, and I just shown I'll get 2 losses in a row. It's quite harsh, but you never know. Okay, so you do never know. But that's all there is for today, guys. Really, I'll upload this one straight after the other one, so you should all be able to view this later on today. Cheers.